Hello. So let's start the video without any delay. So in this video, we will be discussing about the ES short trade which I took on 18th of April 2024, that is yesterday, and I will break down why this trade was different from the other trades which we have taken till now, and what is the different thing, what is the X factor in this trade which you should keep in mind while trading the market maker models and the IFVG hidden concepts. Alright guys, so let's get started. Well, first of all, before starting that what was different in this trade, we should know that why it was different from the previous trades. Let's take a look at my previous MMXM trades. You can see this trade. I will go really quick on this because it's a simple concept. In this, before the sell side of the market maker model curve started, there was a one impulsive buying move. Quite clear, before the sell side there was a impulsive buying move, not a consolidation buying move. In the second example, there was an impulsive buying move before a sell side of the curve. Impulsive, not consolidation, impulsive. Third example, impulsive buying move before the fall. Fourth example, impulsive buying moves before the fall. These all are my tweets. These all are taken from my tweets. You can go through them in my Twitter. My Twitter link is here in the description. So all these are the previous market maker sell model trades that we have taken. Now let's discuss what was different here. Now here you can see, I don't need to explain you this, but you can clearly see it. This was what? Slow buying, channel buying, channel buying, channel buying, channel buying. There was no impulsive move which happened before the starting of the sell side of the curve. So this all you can see, this one was an impulsive move, but here no MSS happened. This was also an impulsive move, but no MSS happened, and this was the final buying move which was happening, and this was a slow buying move which we call accumulation or upward channel accumulation. Note, accumulation will not always be in a rectangle which is horizontal. Accumulation can also be in a trend line form of accumulation. This is called trend line liquidity. Now when such situations arises, you need to be very specific about which IFVG to choose. Many people can make a mistake of choosing this one as our IFVG because this supported price is higher. Some of them can take this one as the IFVG because it also supported prices higher. But what I took as my IFVG was this one, and I will explain you why. This is the main thing why this video is made. Note guys, this is a very advanced concept. I bet on you take any market maker model YouTube video, you will not find this detailed explanation of which IFVG to trade and which IFVG not to trade. So I really appreciate you that you take your time, give this your efforts and do back testing. And if you really like this content, drop a like, share and subscribe this video to your fellow trader friends who can get benefited from it. So you can see, I was not interested in all these IFVGs getting disrespected. If you closely observe, there was a candle to candle SMT which formed here in this consolidation. Alright, yes, it does formed. I'm not going to point it out because it will just make the video longer. You can do your math. And in this whole consolidation part, there was entry of candle to candle SMT which formed, and it was also stopped out, which means if you would have entered here thinking that this is our IFVG and it is disrespected and taking a trade on that candle to candle SMT, you would have got stopped out in this impulsive move. Now why I am taking this as my IFVG? Let's make things quite clear. Now this is all accumulation buying, right? In an accumulation buying, I need to see the final FVG before the whole accumulation buying began, which was supporting prices higher, which was this FVG. From this FVG itself, when prices went higher, it was all accumulation upward channel buying. So this is quite clear that why I choose this IFVG. You can see the similar example of IFVG in NQ. This was all an accumulation or a channel buying. For NQ, which IFVG I took, you all know I just shared that in my posts. Like you can take this IFVG, this one also is a good FVG because it was tapped here. Yes, but for simplicity purpose you can take this one because we were basically, it's the idea that once this level of consolidation is break, we can look for sell side. Quite clear. Now we will hunt for setups. Now I started hunting for setups, and you know, you can also join my Telegram channel. I have a link in my bio, It's not basically a link. I have attached the links to it in my bio. So you can see I said that I also informed you which IFVG is correct on my Telegram channel here itself. When this impulsive move came, I said that why this IFVG is important and this IFVG disrespect is important. You can see this. And when the setup began, I just started explaining you that an SMT, etc., etc. We will see this further. So let's get started. When this IFVG was disrespected at this price points, when prices started to stay below the IFVG, this is the point where I was interested in looking for candle to candle SMTs. Nowhere above this I was interested to look for sells. Now you can clearly see an SMT occurred, and yes, this is quite hard to see. Like, you need to be extremely active while trading such candle to candle SMT. You can see this candle, it's this green candle, 1205 candle in Nasdaq. This below chart is of Nasdaq and the above chart is of SPX. This 12 o'clock 5 p.m. candle on Nasdaq, its high has been taken out in this bullish move. This candle's high has been swept in this bullish move. But if we see this 1205 candle in SPX, the high has not been taken out in this up move. So what is this? This is a bearish SMT, and this candle was an open high and a low. So where do I enter? You all know this really very clearly. Like, I don't need to repeat this again and again. When a candle is open high, it makes an SMT and goes lower. On the crossing of the opening price, when prices are sustaining below the opening, I enter short. So I entered short somewhere here, and my stop loss was just above this candle's SMT high. And as I have to deal with spread, my stop loss was somewhere here, because in spot I have spread to deal with. So I hold this trade. Now many of you, I had two people who DM'd me that when this impulsive, let's move this aside, when this fall came and this impulsive move came up, they exited at break even. Never do this mistake, guys. If you take a trade, it's either a validation or an invalidation. It's either a target hit or a stop loss hit. Accept what it is. Don't get out of your trades because of the weak hand removal moves that happen during the trade. So this was the trade basically, and I held it through till the day low, and I did take some partials, 50% partials somewhere here, and full quantities were taken off when the day low was taken out. And this was a very classic trade. If you see the risk reward, it was almost 6R. If you were a futures trader, then you didn't have to deal with spread, and your risk reward would be around 9, because in futures you don't have spread. So this was quite a nice market maker sell model, classic buy side of the curve, sell side of the curve. Now another thing which I mentioned in my Telegram was, yes, I also gave this trade screenshot, and also I mentioned that total of yes, you can see this screenshot. I said that a total 4 entries formed, right? This first SMT, second SMT, third SMT, fourth SMT, all these were SMTs which formed, and you could have entered on any one of them, right? So it's not that it gave only one opportunity to enter, and I will explain each one of the SMT right now. So I will be quick on this, guys, because the SMT you all know very nicely from the beginning itself. So you see this impulsive move which came, this impulsive move, 1226 impulsive move in SPX, it swept the 1211 candles high. This high of SPX was taken out by this impulsive move. But if we see NQ, this impulsive move did not take this high. This impulsive move on NQ did not take this high. So this was a bearish SMT, and it was an open high low candle, so you could have entered short somewhere here. And as in here the NQ didn't take out the high, so if you are trading this move, then here you should short Nasdaq, not SPX, because NQ has not taken out the high, so NQ is more weaker at this price point. So if you short NQ here with your stop loss above this high, and it's quite safe. Now second SMT happened here. Yes, I will be quick at this. You can see this candle to candle SMT which formed. 1230 candle in Nasdaq took out the previous candle high, but in ES it did not take out the previous candle high. Quite simple. This is an SMT. The third SMT formed here. This is a candle to candle SMT. Yes, this candle took out the previous candle's high, but in SPX it did not take it. It was an equal high. Things are quite clear, guys. The main motto of this video was, see, all these you know how to trade candle to candle SMTs after seeing my so many videos. I don't think it should be an issue. If you still have an issue, go watch all the videos I have uploaded on my Telegram and on my YouTube channel. It is a must. only you can earn money for yourself. I am not a signal provider that I can give you trades like this all the time. You have to learn it and you have to upskill yourself. So this was the main part, that this IFVG disrespect should be your trade point. This above all is noise. You should not get involved in any of this. This is all just to like lure you and stop you out before the final move starts. Quite simple, guys. So this was the main thing, and thank you guys for watching this video. I hope to see you again in the next video.